Hello, everyone. In this session, we're going to talk about the losses. This is one of the important chapter for our business tax paper. Now, this chapter could be really tricky and important for your exam. So all of us, you need to make sure you understand and revise as much as possible. Because in the exam, you're expecting at least 15 marks from this chapter. Now, this chapter is one of the most important chapter from the book, and also there's a lot of rules that you have to remember in order to answer the questions. Some of the area could be very much confusing, especially when there is a loss relief for the individual and for the companies. So you need to make sure you make a proper note for that in order to keep the note separately for the individual and for the companies. So any requirement come in the exam, you know the right answer for that. So let's have a look what we have here. The first thing we can look at here, trading losses. Now we understand what is trading losses. When business do trading, they might make a profit, they might make a loss. So when they have a loss, there is a different way company can offset the loss. So we're going to learn all of this from this chapter. So the first option you can see here, it says option available to sole traders, partnerships, companies to utilize the trading loss. Now, the first thing we can look at here, opening years, carry back, current year, carry forward, and terminal loss. Let's try to understand a little bit about all of the terms we have. Opening year rules is all about when you start the trading and if we have a loss in first 4 years. So first 4 years, if the business have any loss, then this sort of loss can be offset against the different year profit. So you're going to look at in detail later on. The next one, we have a carryback loss. It is possible the loss can be carried back. That means if I have a loss for 2021, I can offset the loss from 1920. So it is possible the loss can be carried back. The next one, we have a current year loss. So if we have a loss this year, for example, if we have a loss in 2021, £10,000, and if we have profit same year from other income, not from the trading. So for example, if we have income from property, if we have an income from non-trading loan relationship, so any other income we have, this sort of loss we can offset from that income. The next one we have carried forward. The carried forward loss is very much common, and most of the business, they do that. Whatever loss we have this year, we always carry forward. For example, for the loss of 2021, we carried it forward for 21 and 22, and we carry forward again for unlimited period. Then we have a terminal loss. Terminal loss is all about when business close the activity. Close the activity. That means the business is shut down or business cease the trading. In this case, the final year loss we can offset from the previous year. So you're going to look at the treatment for that. The next point is says the best use of the trading loss for sole trader, partnership, and the limited companies. Learner need to be able to calculate available loss relief using carry back, current year, and carry forward. So from here, we don't understand much. It's just like the terms. So if we go to the chapter overview, maybe we'll look at a little bit in detail. So let's move on to the chapter overview and have a look what we have here. On the chapter overview, the first thing we can see here, relieving trading losses individual. The first thing we have for the individual. Remember that individual and the partnership is kind of the same thing. So when you have a sole trader, we treat this one individual business. When you have a partnership, at the end, all the partners are individual because partnership don't pay any tax on behalf of the partnership business. Rather, individual partners are liable to pay the tax based on their individual income. So for that reason, when you have a relief for trading losses for individual, that represent both sole trader and partnership business. So let's have a look at this one. The first study says tax year of loss. Which year we make the losses? Now let's say our loss year or year of loss, let's say 21 and 22. So first thing what we'll do, normal current year basis. So first we use the normal CYB, that is current year basis. Current year basis represent the 12-month period. Normally the loss we have here, unless if the loss is not within 4 years, we don't use the opening year rules. So we understand this loss is only for 12 months and we are using this for a long time. So the business started maybe 5 years or 10 years before, and the loss is making this year. The trading profit will be nil. Of course, like if I have a loss, I will have no profit for this year. Choose what to do with the losses of the tax year. Then I have to think what I'll do with the loss. So for example, the current year I have some loss, what I can do, what options I have to offset or utilize these losses against the profit. The next one we can see here is this consideration. So before I choose the option, how many options I have, I need to look at a few things before I decide I will go for that or not. Because I might have more than one option. So I need to decide, shall I go for this option? Shall I go for this option? Shall I go for this option? The first one, we have a timing. So the timing is important. When the loss actually occurred or incurred. So you need to look at that timing first. Rate of tax saved. So how much tax will be saved if I carry it forward? How much tax will be saved if I carry it back? For example, if a person is a lower rate taxpayer, and let's say, for example, in 2021, let's say 2021, we have a loss of 5,000. And this loss, I can carry it back, let's say 1920, the previous year. Now, on the previous year, I can see this person have a total income, let's say 10,000. So I have an option to carry back this loss and minus 5,000 from 1920, from the previous year. But the question is, if I do that, is it helpful for me? Why it cannot be helpful, or why it could be helpful? So the first thing I need to look at, this 10,000 is less than 12,570. That is our personal allowance. So less than personal allowance. So this 10,000 will be covered by personal allowance anyway. This amount will be covered by the personal allowance anyway. So he will not pay the tax anyway. So the tax will be zero. So even though I don't move my losses to previous year, if I don't carry back the loss to previous year, still the person don't have to pay any tax on 1920 anyway, because his tax or his profit or his income will be covered by his personal allowance. So rather, if I carried it forward to the next year, let's say 21, 22, and if I make a profit, let's say, for example, 20,000, and if I minus the 5,000 from there, so I'll save some tax because it will not wholly cover by the personal allowance. So this is one of the things we have to consider, because loss can be carried forward for unlimited period. I can carry it forward the loss for unlimited period. and I can carry it back as well. But if it is not give me any benefit, then obviously it's not helpful. Now, if you look at the other example, for example, in 1920, this person have an income, let's say 50,000. So you understand he's a higher rate taxpayer. So if we move this 5,000 here, that means we save a tax 40%. So if someone is a higher rate taxpayer, he pay 40% tax. That means 40% I can save if I carried back the loss. So it depends how much the person earning, and based on that, we have to take the decision. For that reason, it says here, rate of tax saved. Waste that personal allowance, it is possible. I can waste the personal allowance because if I carry back the losses, even though carry forward the losses, it is possible I can lose some personal allowance. Okay, now let's look at the option. What options we have for the individual? The first option I have carry forward loss relief. Whatever loss I have this year, I can carry forward for unlimited period. And this is automatic. I don't have to do anything. I don't have to claim. I can just like take away from the future trading profit. So carried forward first available trading profit. Now this word, I want all of you to remember this word. All of you need to be focused on this word, trading profit, because in the question, there'll be a lot of word that is called trading profit and total income. Sometimes the student get confused between these two. So total income represent any other income we have. For example, property income or loan interest income, investment income. So all the income can be included on total income. But the trading profit is only the profit we make from the trade. So the question will make you confused between these two words. And if you are not very much careful, you might make a mistake between these two words. So carry forward. So when I carry forward, I can only offset the loss from the future trading profit. The next one we have current year or prior year. So it is possible I can offset the loss from current year and previous year. So this time I have to look at the total income, not the trading profit. So if I offset my loss from current year and from the previous year, I can use the total income and minus the loss from the total income. All or nothing. So either I have to claim the full amount or I will not claim at all anything. May waste personal allowance, because if I use the all losses to previous year, maybe I'm going to lose my personal allowance. Maybe the loss will cover all the profit and my personal allowance will be wasted. So you need to be careful with that. We cannot just say, like, for example, our loss is 15,000, our profit is 15,000. And I just want, let's say our loss is 10,000. I just want to use 5,000 here. And so that I can use my personal allowance and make it zero. It's not going to happen. So you cannot save your personal allowance. Either you have to move all the losses or you don't do anything at all. Then we have a current year only. Either I can do current year only and carry it forward, or previous year only. I can do only previous year, or I can do both current year or previous year, any order. So there is no restriction for that. Any order, I can follow that. But for the company, we cannot do any order. We're going to see it later on. The next one we have that is called opening year relief. Trading loss in first 4 years. So in the first 4 years, if we have a loss, we can use the opening year loss relief. Carry back 3 years FIFO from total income. Very careful with this word, total income, not the trading profit. So if I have a loss in first 4 years of the business, I can use the opening year rules, and opening year loss relief will allow me to take away all the losses from the total income by using FIFO basis. that is first in, first out. That means, for example, if I have a loss in 2021 and 22, I can go back 3 years, but I have to use the FIFO basis. So if I go 3 years back, let's say it will be 2021 and then 1920, and let's say we have 1819. So first I need to minus from 1819 because first in, first out. Then I have to move on to 1920, then 2021. I cannot use from the previous. I have to start from the first year. And this is first in, first out, FIFO basis. So I need to use all the losses utilized on the first year, that is 1819, then 1920, then 2021. All or nothing can claim. So I cannot split the losses. If I have lost 10,000, I need to make sure I utilize a maximum each year. I cannot save any personal allowance. The next one we have here, terminal loss relief. Terminal loss relief, when the business closes or the business ceases the trading, we need to look at loss of the final 12 months. If we have a loss, we need to look at the last 12 months. For example, if I close my business 30th of June, I need to go back 12 months. We need to add if there an overlap profit. So we know what is overlap profit. So if the profit is counted twice, so we call it overlap profit. If we have any, we need to add that. Then carry back 3 years FIFO from the trading income. This time it is LIFO, not FIFO. So carry back 3 years LIFO basis. LIFO represent the most recent, then we have to go back. So for example, if we have the losses on 21 and 22, we need to go back first 2021, then we go back 1920. So we need to use first the last profit. So last in, first out, LIFO. So the latest profit we use first to use the loss. So all the losses we need to offset from the most recent profit. Then we'll go year back, then your year back. So this is opposite of the opening year rules. The opening year rules tell us use the first year, that is FIFO basis, but the terminal loss, the closing year rules is say use the last one. So you need to be careful between this thing. All or nothing claim. So again, the same thing. Either have to claim everything or I'll not claim anything at all. All right. So if we look at the next thing on the chapter overview, we have for the corporation tax. Now, on the corporation tax, we have trading loss and we have a capital losses. Now, capital losses is all about like for the long term. Capital losses can only be offset from the capital gain. So offset automatically against the capital gain. So if we have a capital losses, we need to offset it from the capital gain. Any excess carry forward into the future year. So we need to only look at if we have a capital loss, we need to wait until we have a capital gain and we can minus from there. We cannot utilize the capital losses against the trading loss or trading income. The next one, we have a consideration, same thing. What we need to consider before I choose any option. I'll consider the timing and waste of charitable payment. Now, before we said we can lose the personal allowance for the individual and for the partnership, but for the corporation tax, there is no personal allowance available for the business. So they have allowable expense, that is QCD, qualified charitable donations, but this one I might waste because we have to use it before the QCD. So if I have a loss, I need to utilize the loss before the qualified charitable donation. So in some cases, we can waste that like a personal allowance. Now let's look at the options. What options we have? The first one is says carry forward. This is very common in a limited company. Any losses we have, we always carry forward for the future year. So trading losses are carry forward and can be offset against the total profit of a later accounting period if a claim is made. So offset against the total profit. Total profit. This sort of word you have to highlight and you have to remember. So when you carry forward a loss, we can offset from the future total profit. Then we have a current year offset against the total profit. So if I like to offset my losses from the current year, offset against the total profit before QCD, before qualified charitable donation is optional. That means I have a choice. I can offset from the current year, or I can just choose to carry it forward it. There is no restriction for that. All or nothing, I have to claim all the losses. I cannot save the QCD or qualified charitable donations. So either I have to claim all the losses at the same time, or I'll not claim anything. It's optional. I can carry forward that, or I can claim the losses from the current year of the losses. So the losses we have this year, I can claim this year, or I can carry forward, is up to me. Then that will be different for the carryback. I can go 1 year back, only 12 month, previous 12 month. For the company, I can only claim 12 month back. And obviously, like for the individual, also 12 month back. But if it is opening year rules, then you can go 3 years. Offset against the total profit. So offset against the total profit before QCD. So for example, if my loss is 21 and 22, I can go back 12 months. That is 20 and 21. So I can go back only 12 months. Optional, I really don't have to if I don't want. All or nothing, I have to claim everything, or I will not claim anything. Must do current year first. That's the important one. Must do current year first. So if I want to use my loss and carry back it in previous year or 1 year back, I have to make sure I have used my losses current year first. So I cannot save the current year. So I need to claim current year first. And if I have any losses left, then I'll move to the previous period. When you look at the example, then we'll be more clear for that. But for the time being, remember, for the company, if we carry back the loss, we have to make sure we utilize the current year first before we can go to the previous year. So it is the rules. We cannot go back to previous year until we use the current year. Extend it to 36 months for terminal losses. So if the business is closed, then it can be used for 36 months. That is again 3 years. This is more or less the topics or area we're going to cover from the trading loss chapters. But this could be really tricky if you don't practice well. So you need to make sure you revise every single pages you have on the book, especially for the tags. Every single thing you have on the books is the rules, and you need to remember that, and you need to keep making a note every time, because before the exam, it will be very hard to remember everything at the same time. All right, so let's move on to our few examples. Let's see if we can do it. There is a format for that, how to find the taxable income. So first, to look at the trading income and carry forward relief against profit of the same trade. So if we have any loss that is carried forward from the last year, then we added the saving income, rental income, that gives me total income. From the total income, we minus the current year or prior year relief against the total income. So this one goes with the total income, and that will give us the net income. Then you minus the personal allowance to find the taxable income. That's for the individual. As soon as you see this one, personal allowance, that represents for individual, because the company is not allowed to have a personal allowance. So make sure you understand these two. Trading income and the total income is not the same thing. So some of the losses you can only minus from the trading income if it is carried forward. But if it is total income, then if you carry it back, then or current year, you can use from the total income. So this thing need to be clear. When you carry it forward, you can only use the losses from the trading income or trading profit. If it is carried back or current year, you can use from the total income. All right, let's move on. There are a few examples we have here. You can read that. We will start the activity. Let's try activity 1. Income tax, trading, loss options. Edward runs the gift card shop, and his recent actual and budgeted trading result are as follows. So year end, 31st of December 2019, year end 31st of December 20 and 21. So you have 3 years. So 19 we have a profit 5,000, so that's a profit, and 20 we have a loss, that's our loss, and 21 we have also profit. So this 8,000 loss, we need to see how can we utilize these losses. He also received 12,000 rental income per year. That means every year, 19, 20, 21, any year, he also received 12,000 rental income. So that's the other income. So this is the trading income, and this is the 12,000. That's the rental income. That's other income. The reason it is important, because we can use the losses from the total income. In this case, the rental income will be part of that. Show if the following statements are true or false by ticking the correct box for each. So you need to say, is it true or false? This sort of question will be very common in the exam, to asking you true or false. Edward may offset the loss against the total income 1920 and then 1890. So try to understand which year the loss we make. The loss we make December, that means it is 2021. 2021, our year is April to April. So 6th April to 5th April. So April 22, April 21, this is our tax year. So this 21, this 20, 31st of December, this comes under this period, April to April 21. So that means it's come December. So this is 2021 tax year. So 2021 tax year, I have a loss. And this loss, I can only go back previous 12 months, only 1 year. Remember that, only 1 year I can go back, 1 year back. So the question is saying Edward may offset the loss against total income 1920. So we have 2021. So that means I can go back 1 year, 1920. This is true. 1 year I can go back. And then 1890. This is not true. I cannot go back 2 years. My loss is on year 2021. So I cannot go back 2 years. I can only go 1 year back. So that is 1920, not 1819. So I'll say this is false. It's very important to understand the tax year, because you need to identify which tax year the loss is incurred. Edward may offset the loss against total income and 2122. So that's my future year carried forward. They're saying if I carried forward the loss is incurred 2021. And if I carry forward the loss to 2122, remember, if I carry forward, I can only use the trading income. Trading income, if I carry it forward. If I carry forward the loss, I can only use the trading income. But they are saying I can use the total income. This is not true. So it is false. If I use the current year or previous year, this is right. I can use the total income. But if I carry forward, I can only use the trading income. Edward may offset the loss against the trading income only in 1920. So Edward may offset the loss against the trading income only in 1920. Now 1920 is the previous year. If there is a previous year, then I can use the total income. Remember that, not the trading income only. So current year and the previous year, I can use the total income, but they're saying I can use only the trading income. That's not true. This is also false. Edward may offset the loss against the rental income in 2021. Remember that if there is a total income, 2021 is the loss-making year. This is the loss-making year. That's my current year. So I can use from the total income. And of course, the rental income comes under the total income. So 12,000. This is absolutely true. I can use my total income to offset my losses. So this 8,000 I can minus from 12,000 because the losses and income happening in the same year. So this sort of word, as I said, the total income and the trading income need to be very careful. Otherwise, it'll be very confusing in the exam. All right, let's move to the next one. The next one, we have how to utilize the losses. So let's try to do that. Let's read the question. It's a Pike commenced trading on 1st October 2002. So we can understand it's more than 4 years. So you don't have to use the opening year rules. Making of his account 30 September 2003. That means October to September 12 month. And annually thereafter, his recent actual and budgeted result are as follow. Okay, so year ended, we have 20, 21, 22, and 23. So you have up to 4 years here. So we can see the first one is says profit 2000. And this is on September. So September means April 22, April 21, that is 2021. The first thing we need to identify the tax year, 2021, because it comes between April 20 to April 21. Then we have a 21, we understand it's 21, 22. So 21, 22, then 22, 23, and 23, 24 tax year. Now you can see 21 and 22 we make a loss. And this loss we need to offset. He has received rental income. So 2021, 400, 1022, 23, 1000, and 24, 1000. This is the other income, rental income we have. The requirement is says complete the following table showing Pike total income. So you need to find it out total income for 21 to 23. Assuming maximum and earliest claim against the total income are made. Enter 0 in cell as appropriate. So this is a very important word. It says earliest claim against the total income. So they ask us to claim the loss as earliest as possible. That means we need to claim the loss from the beginning. So didn't say like carry forward, they said as early as possible. Okay, so let's find out first how much is the trading income for 2021. That is 2000. You can see here 2000. 21, 22, we don't have any income, we have a loss, so no trading income, so we put 0. They said put 0. 22, 23, 8,000. 23, 24 is 4,000. So you have all the trading. Then a loss carried forward. Now the loss carried forward, they said as early as possible. So we have a loss on 20, 21, and 22. Now the first thing we need to look at, how are we going to utilize this loss? Now, remember one thing, this question obviously like could be very tricky if you don't understand it. So first we need to understand the loss is happening here, 21 and 22. And this loss, they said as early as possible. So that means first I'm going to offset all the loss from here, from the previous year. And when you're going to use the previous year, I can use the total income. And then I can use my current year total income again. And when I go to the future, the carried forward, I can only use the trading income. Trading income, not total. Remember that. Trading income. And again, future trading income. This is the main trick here. Remember that. So for the future year, I will not be able to use the total, only trading. Only trading. But here, total. Total. So let's try to identify the total income for 20 and 21 first, and 21, 22. So let's start with the first one. 2000 we have for the trading, and 2021 we have a property 400. So 2000 plus 400, total is 2400. This one I can use to offset the loss because they said as earliest, so we need to use the very earliest year first. We have a current year loss relief. This year we don't have any loss. The year of 2021, we don't have any loss. We have only profit. So we have to say 0. Then previous year loss relief. So previous year loss relief, this one we have to look at, like, is there any loss come from the previous period? Now, previous year loss is always like the loss coming from the period that comes from, it could be like from 2022, or it's depend which year we have a trading. So we have a loss here that is total 15,000 on 21 and 22. So from 15,000, the first loss I can offset from 15,000, the first loss I can offset from the total income from the previous year. So my previous year loss, I can minus 2,400 from here, the first year, so previous year loss. So offset from the previous year, so that is 2,400. The reason we called it previous year, because my current year is 21, 22, remember that. And I make my net income 0. I make my net income 0 here. The next one I can do the next year, because after 2021, the earliest one is 21, 22. We don't have any trading income here, but we have some property income, and that is 1,000. That's my property income, 1,000. And my total income is 1,000. In 21, 22, I have a loss. This is current year loss. The same year I have some loss. I can use maximum total income, that is 1,000. I can minus from here. And the previous, I don't have anything, so my net income is 0. So first I utilize all the total from earliest one, 2021, then current year. So I said from current year, I take away 1,000. Then I have to carry forward because I don't have anything this year, anything more. So I need to carry forward all the losses. Still I have some loss because from 15,000, I have minus 2,400 and minus 1,000. So I still have some loss to carry forward. When I move to the next year, I can see, of course, like I have trading income, but I will not be able to use the total. Remember that I only use the trading. Remember that trading. So I'll minus the 8,000 from here. And obviously my property income we have here 1,000. And my net total income will be 1,000. I cannot use my property income for the future. Remember that only the trading from the future. There's 0, 0 for the previous and current, and that gives me 1,000 from the property. The next thing is same, 4,000, but do I need 4,000 if I minus the carried forward 8,000? So I need, how much I need? I need only 3,600 to offset all my losses. So from the 23 and 24, I will minus 3,600 because this is the remaining balance of the loss. So I have 400 left here. and I have a property income also. So I can say, okay, this is on the property income column. So leave this one. Property income, we have 400. Now it says property income is 1000, isn't it? So we have 1000 property income. So the total income will be 4000 minus 3600 plus 1000. That gives me 1400. And no carrying a current year loss, no previous year loss. That gives me 1400. So you can see here, this 15,000 losses, first we utilize with the previous year, and then we use the current year from the total. Then from the future, we use like only the trading. That's the story. As the question said, earliest. There's no restriction for that. I can use the current year, then I can use the previous year, or I can carry it forward. It's up to me. But if the question mention you as early as possible or earliest claim can be made, so you will use that way. The first thing you notice here, when I carried forward the losses 2021, you can see my income was only 2400. My total income is only 2400, and that is less than 12,500 something 70, I think, for the personal allowance. So this is less than personal allowance anyway. So if it is less than personal allowance, so I really don't have to carry forward the loss, because this year I'm not going to pay tax anyway, because all the income will be covered by the personal allowance. So just make no sense if you transfer the loss to previous year, because you're not saving any tax. So better if you just move it for the carried forward for the future year. So what will happen, like in future, if you make a profit, you don't pay any tax. All right, let's move to the next one. The next one is says, show if the following statement is true or false by ticking the correct box. Pike has used his loss in the most tax efficient way possible. That's false, because he carried forward the loss, and if we carry forward on the earliest period, so we are not saving any tax, because this year's the income is under the personal allowance, the profit is under personal allowance, so we're not saving anything. It's not the most tax efficient way. We should carry forward the losses, so that in future if we have a loss, we can take away from there. All right, let's move on. The next one, I talk about the opening year loss. Opening year loss, like this gives us 3 years. If the company have a profit in first 4 years, we can carry it forward it, and we have to use the FIFO basis, first in, first out. So let's look at one example to understand it. So let's read our activity 3. Opening year loss relief. Jurgen Kloss commenced trading on 1st July 2018. So started business July 18. So 30 June 19 next year, there is a loss 40,000. Then profit on 20, 24,000, then profit 30,000, 36,000. Georgian total income to 1819 was 68,000 each tax year and has no other income. So the total income before 1819, this is comes under 1819. So before 1819, it was 68,000. So this is the story you need to remember. So his total income prior to 1819 was 68,000. We don't know from where. It could be from like other income, property income, could be anything, but it was 68,000. That's all we know so far. It has no other income. Requirement: determine Jorgen trading income assessment based on the above result, and to which year Jorgen trading loss is attributed under the opening year rules. So opening year rules, we know that we can go back 3 years and we can do the FIFO basis. But before that, we need to understand how we do the trading assessment. Now, the trading assessment is all about the rules for the business, the way we did for the opening year rules before. Here we need to know how much tax or loss but like how much profit or loss they're making based on each tax years. For example, let's have a look. The first one, trading assessment. So it's a trading assessment. Any tax year, remember that you start from always the day he start the trading, and you have to stop on 5th of April. So for example, the business is started on July 18th, so you have to start from the July and will stop when there is a 5th of April. So that will be my first tax year. So in July 18 means we are in 18-19 tax year. 18 started from April and will end on April 19. So we said 2018 and 19 tax year. So they started from July 18. So first July 18, the day we start the business, and we have to stop 5th of April. 5th of April 19. Even though it take up to 5th of April, but we always consider up to 31st of March. We don't consider the 5 days. So you really don't have to divide with the days. We always take the month. So this is our first tax year for 18-19. And this period, I don't have any profit because up to 30th of June, I make a loss. So I will say my trading profit here, I have no profit. I have actually the loss. So I'll say nil. Then the opening year rules is the 12-month period. So the first 12 month, my year is ended on June. So from the June, I have to go back 12 month. So I would say this comes, June come under 1920. 19 is started from April and we'll stop on 20 April. So the year is ended 30th of June. So it is 1920. So 1920. So it's a 12 month. It's the opening year rules. So first 12 months, July to June. So 12 month to 30th of June 19. And this period also we have a loss, 40,000. So no trading profit, nil, because it is also loss. The next year we have 2021, and we have to look at the year end. Year end is 30th of June 20, and it started from July 19. So we say the year end, that will be current year basis. So 30th of June 20, and we have a profit 24,000. Then 21 and 22, again current year basis. So we have a 30th of June 21. This one we have 30,000. And finally, we have 22 and 23, that is 30th of June. So 22 and 23, current year basis. So 30th of June 22, and that is 36,000. If you remember the previous chapters you have done, so you've done the trading profit. Now here you can see definitely there is overlap because the first few months we're calculating again inside here with the next 12 months. So you need to remember that this kind of the trading profit you was doing before is like a trading loss. So this is my trading assessment. So this is all the tax year I have from 18-19, 19-20, 20-21, and 20-21 and 20-22 and 22-23. 7-5 tax year, the combination. The next one, they're asking how the loss will be attributed. How the loss will be attributed. So they said in which year trading loss attributed. So this loss 40,000 on which year I'm going to allocate. So let's look at from the first 18-19 one. So in 18-19, 2018-19. So the next thing is attributable allocation of the loss. So 18 19, 18, 19. So if you look at the month from July to March, so July, August, September, October, November, December, January, February, March, 9 months. So from the 40,000, I have to take 9 months, that is July to 31st of March. So I'll take 40,000, let's say, divide by 12 times by 9. So this loss I'll allocate on 18, 19. That is 30,000. The way we allocate the profit, the same way we allocate the loss. Then for the next one, next 12 month, so this is 19, 20. And this time the loss is 40,000. We take the whole 12 month till June. So 40,000. And you can easily see this 30,000 also included inside of the 40,000 because of the overlap profit. So you need to say we have used on 19, less used 19, 20. So we have already used 30,000 in 1920. So actually for 1920, we have a loss 10,000. Even though it is 40,000, but this 40,000 I already used in 18, 19, 30,000. So I have 10,000 left. So you need to understand that. Okay. So clear. So this we can basically make a box. 1920 we have a loss 40, but already used 30 on 18, 19. So we have 10 only for the 1920, the loss. Now we need to look at how can we utilize the loss. For the loss of 18, 19. So now we know 18, 19 we have a loss of 30,000 and 19, 20 we have a loss of 10,000. So let's talk about this loss first. 2018 and 19 we have a loss of 30,000. And what option we have to utilize the loss? Now, when you have a loss, obviously, as we discussed before, it is opening a rule. So we can utilize the loss for last 3 years by using the FIFO basis. So as we know, any loss, we have options. So this 18-19 loss, how to relieve, we have 3 options. So first option, we can set off the loss from our current year, then we can go back to the previous year. So this loss 30,000 is for 18-19. So 18-19. So you need to look at, is there any income here we have from the 18-19, and we don't have any income 18-19 because we make the loss 30,000. So we can say like relief from current year total income and previous year. Now previous year is 17-18. If it is 18-19, so previous year will be 17-18. And the question said prior to 18-19, they have a 68,000 the income. So in 17-18 we have income 68,000. So from 68,000 I can minus 30,000. So this is the first option I have. Either I can look at, is there any income I have current year that is 18-19, and if not, I can go back 1 year, so I can offset it from the previous year. This is option number 1. The second option I have, I can use the opening year rules. So opening year rules means I can go back 3 years and offset the rules from the first year under the FIFO basis. That means if I am in right now 18-19, that means the last 3 years will be 18, 17, 18, Then we'll have 16, 17. Then we'll have 15, 16. So this is my 3 years before the loss-making year. And I have to use the FIFO basis. That means I can offset the loss from the first year, first in, first out. So that means within this 3 year, the earliest year is 15, 16. So I need to offset the loss from 15, 16. Then if I have any loss left, then I'll minus from the 16, 17, and then 17, 18. So this is the another option I have under the opening year rules. And I have to make sure, like when I utilize the loss, for example, if I have a loss 30,000, I need to make sure I offset everything from 15, 16. If there is income 68,000, I need to minus everything from 16, 15, 16. We cannot just use just a little bit loss and we can forward and we save the personal allowance. It's not going to happen. And finally, the third option we have, that is carry forward the loss. Carry forward, that means I'm not going to claim current year or previous year or not the opening year rules, but I'll carry forward. So if my losses happen on 18-19, so I'll carry forward for 19-20. But unfortunately, 19-20, we don't have any profit. We have a loss 19-20 as well, 10,000. So we need to carry forward next. So that is 2021. So first profit, I have 2021. So I can say from 2021, I can minus 24,000. So 24,000 can be offset from 2021, and rest of the balance I can minus from 21 and 22 from the future year. So any future trading profit, not the total income, remember that, the trading profit. If I like to carry it forward, I have to always use the trading profit from the future period. And that's how I can utilize it and fix this loss. So I have 3 options. Option number 1, that is current year and the previous year. Option number 2, the opening year rules, last 3 years, FIFO basis. And option number 3, carry it forward. The first 2 options allow me for the total income. And for the third option, allow me only the trading income. This one you have to remember. All right, now let's talk about the 10,000 loss we have for the 1920. Same thing, the way we did. So same option we have. Either we can do from 1920, then we go back like a current year rules. Then either we can do kind of the same thing for the FIFO basis, but this time we need to go back from this year. For example, from 1920, you have to go back 3 years. So if you go back 3 years for 1920, it will be 16, 17, 17, 18, and 18, 19. But before it was from 15 because we go back from previous 3 years. So if it is the loss 1920, we go back 3 years, and that will be 16, 17, 17, 18, and 18, 19. We have to use, make sure the first one, FIFO basis, all the losses 10,000 have to use here first. And the third option will be carried forward, same way from the same trade. So especially story the same. There's nothing to be new because all the losses have 3 options to offset. All right, so let's move on. Make sure you practice this sort of question, could be really tricky in the exam. So if we look at the next question, that is terminal loss. Terminal loss, as we said, is quite simple if you understand that. First, we need to look at the final tax year, unrelieved trading loss from 6 April to date of session. So we need to look at from the 6 April till the date we stop the business. For example, if we stop the business on June, 30th of June, so from 6 April to June, how many months? We need to calculate that here. And after that, we need to look at 12 months before. So for example, if we stop on June, from the June, we have to come back 12 months. And any overlap, it will increase. And after that, we need to minus that, the trading losses if we have together. All right, so let's have a look at one example to make it more clear. So the first thing we can see when the business was started. So commence on May 12th, and year is ended 30 September each year. She ceased trading 30 of June 21. So that's my cease trading. Remember that. It's a very important date. The most recent we have transaction year ended 17. We have a 10,000, 18, 8. Year ended 19, 10, 20, 4,000. And finally, at the period, it's not a year. You look at that PE, it's a period. That means it's not 12 month. 27,000. We need to know how many months is here. We have some overlap profit. We need to add it this one to increase the loss. Okay, the first one we have to calculate unrelieved loss from April to date of session. So April, 6th April, when we till the date we close the business. So we close it on 30th of June 21. So it says 6th of April 21 to 30th of June 21. So this is our first calculation, 6 April 21 to 30 June 21. And here, how many months we have, we need to calculate that. So we have April, May, June, 3 months. So 3 months we have here. So 3 months we need to calculate. Now the loss we have for 27,000 for how many months? It's a period, so it's not a year, so it's not 12 months. So it started from September, year end is September. So here we stop in June. So it start from October to normally September, but here we stop October to June. So October, November, December, January, February, March, April, May, June. So 9 months. This 27,000 represent 9 months here. So we say 27,000 divided by 9 and times by 3 because it's 3 months here. So how much it is? 9,000. Then you have to add the overlap profit. Remember that. Increase the loss. Overlap profit 3,000. Make it minus because it's a loss. So my total loss is 12,000 here. The next calculation will be unrelieved trading loss. This one is 12 months from the day we stop. So you can see here the day we stop, that is 30th of June. So we need to look at that. So we all have already calculated few months. So we said from 1st of October, 20 to 5th of April 21. So we have 6 months here. So 6 months over 9 months times by 27,000. So this loss is for the 9 months. We know that we have calculated here up to 6 April to 30 June. So before that, how many months we have? We started from October. So our year is October to September, obviously. So October till this period, 5th of April, because we have calculated the first few months, that is April from the cease date. So before how many months we have? 12 months, we need to look at that. So we started our business always October to September. So October to 5th of April, we have to stop because the first one we have calculated up to from 6th of April. So we stop 5th of April here where we have stopped last time. So October to 5th of April, we have a 6 month here. This gives me 18,000. And then we have 1st of July 20 to 30 of September 20, and that gives me 3 months. So 3 months, 3 over 12, and it was 4,000 times by 4,000, and that gives me 1,000. But this is a profit, this is not a loss. The first one is a loss, and this is 1,000. So I'll say 1,000. This is my profit. So it gives me 17,000 loss. So 17 plus 12, my total loss will be 29,000. That's my terminal loss. So let's go quickly try to understand one more time. So when my year is ended, that is 30th of June. So 30th of June is my year ended, 21. So all we have to do, we have to see from this date when I have a year ended. So first thing I have to do from April to 30th of June. So it doesn't matter when it is closed. So the first one you have to start from April. So 6th of April 21 to 30th of June 21. This is my first calculation. And we have here 3 months. So that is April, May, June. So 3 months we have calculated from here. We need total 12 months, remember that. So we have 3 months here. So now we need like another 9 months. So this is our first calculation. The next one we need 12 months. So 25th of April. The next 9 months will come from the previous period. Now we have took till June. So April to June is done. Now we go back from the April. So from the April, if we go back, so that is started from 1st of October. Always the year start from October, because if the year is ended on September, that means started from October. So we said last year, October. So October 2, we stop here, 5th of April 21, because started from 6, we stop 5th. So October to 5th of April. So how many years we have? So October 20. So October to 31st of March. Don't have to take the April. So October, November, December, January, February, March. 6 months. We take 6 months from here. So you have 6 plus 3, 9 months. And finally, another 3 months goes to the last period. So we need 3 months from the before October. That is July, August, September. No, then July, August, September. Yeah. This is July to September, 3 months. And July to September 20. July 20 to September 20. That comes under this period. 3 months here. So now we have 3 plus 6, 9 plus 3, 12 months. So we need the previous 12 months. So the day we close the business, from this day we need previous 12 months. And this previous 12 months can be in a different accounting period. This is your challenge to find it out. So the first rules is like the day we stop the business, from there we go back till April. And the next one is from the April, we go back when the year is started. And finally, if it is how many months left, we take from before the October, how many months we need from the previous accounting period, we take from there. And once you have 12 months, we'll stop. Once you do some practice for your time, when you do the question first time, maybe you feel a little bit tricky, but when you do the same question second time, you'll feel really easy. So any question you do, make sure you do twice. Even though you feel I know the question, but don't just do once, do twice, every single question. All right, let's have a look. The next one, what do you have here? The next one, you have a corporation tax losses. Corporation tax losses is quite straightforward compared to the individual tax losses. So here we need to look at a few things. So you need to aware of the following 4 methods by which company may obtain relief for the trading losses. The first one we have here, carry forward. So loss can be carried forward, set off against the current total profit. So that is current year total profit, but it is optional. If you don't want to set off the loss against the current year profit, you don't have to. Carry back, optional. Terminal loss, also optional. So only this one, carry forward, is automated, and rest of the loss relief depends. If you like to offset it, you can go for it. If not, then there is no problem for that. All right, so let's have a look on example. Hopefully you'll understand more from there. So you have activity 5 here. Let's have a look at this one. So we have S Limited has the following actual and budgeted result for the 3-year to 31st of March 2022. Trading profit, 2020 we have a loss, 2021 5,000 profit, and 22 6,000 profit. We have a property income. In 2020 we don't have any property income. 21 2000, 22 2000. Assuming S Limited carries the loss forward, so we're thinking about the carry forward loss here. So you're not going to offset from the current year, and also you're not going to offset from the previous year. Instead of, we're going to carry forward the loss. Claims to utilize as much loss as possible, the loss carried forward at 31st of March 2020. So how much will be the loss carried forward at 31st of March? So let's try to look at that. First, we need to know how much profit we have. So if we make the 2020, 2021, and 2022. So the first thing we'll do is the trading profit. So we have no trading profit for 2020. For the 2021, we have 5,000. For the 2022, we have a 6,000. And we have some property income. So 0 for 20, 2,000 for 21, 2,000 for 22. So we have 7,000 for 21 and 8,000 for 22. So the next thing we'll do, we will look at our loss relief. So loss relief, we have 20,000 loss. So from 20,000, we can offset 7,000 from trading profit or total profit, 7,000 from total profit, and 8,000 from 2020 total profit. So this is the carried forward we have, and all this year our total taxable profit will be 0. So my TTP will be 0. So when we do the carried forward, remember that we'll offset from the total profit, and the total profit means the trading profit plus the property income, any other income. So all the profit will be added, and the carried forward loss will be only moved from the total profit. So you can carry forward it and take away from the total profit. All right, so the loss carried forward will be how much? So from 20,000, 7,000 we minus from 2021, and 8,000 we minus from 22. So still we have a loss of 5,000. And this loss will be carried forward for the next year. That will be at the end of the year 2022. So at the year end 31st March 2022, after that, the closing balance will be 5,000, and that we're going to carry forward for the next year. So it says a loss carried forward at the end of the year 2022. We have still 5,000 loss that we need to offset from the next year. All right, let's move to the next one. The next one is says relief against total profit. So we have a current year relief, we have a carry back. So if we carry back, remember that we need to make sure we claim the current year first. So if you look at this one, carry back loss relief. Trading loss can be carried back against the total profit, including the gain. That means if we have a taxable gain, we can also use that. Before qualified charitable donation, but before the QCD of preceding 12 months, so previous 12 months, carry back claim may only be made after a current year claim. Remember that is different to the individual. You remember the individual, there was no restriction for that, but for the company have a restriction. If I like to claim for the previous year, I need to make sure I claim for the current year first, then I can claim for the previous year. All right, so let's have a look. Our example. So we have activity 6. Let's have a quick look at this one. CK Limited has the following actual and the budgeted result. Year ended 31st of March. So here is a current year and the carry back relief. As you already know, if we claim the current year, then we can only go back to the previous period. We can carry back. So first we need to claim for the current year. Either we can carry back or we carry forward. So regardless, I like to carry forward the loss or carry back. So first I need to first I need to claim the current year loss. Now, obviously, if I want to carry back, I have to. There is no option. I have to claim the current year first, and then I can carry back. But if I don't want to do that, I can carry forward it. If I want to carry it forward, then maybe I don't have to claim for the current year. So only it is mandatory for the current year claim if I carry back. Other than if I like to carry forward, it's my choice. I can do the current year, then I can carry forward, or I can carry forward straight away. All right, let's read this question. So we have trading income 2020 20,000, 21 10, and 2022 we have a loss 100,000. Capital gain we have 50 50 and 50. Okay, remember that even if we have a trading loss, we will be able to offset against the capital gain for the company. Show if the following statement are true or false by ticking the correct box. Okay, K Limited may claim to offset £60,000 of the loss against the total profit 31st of March 21. They said like from this year 2021, and we have 60,000 here, I can offset 60,000 loss from this 100,000 on the previous year. This is not true. As we said, if I want to carry back the loss, I have to make sure I claim for the current year first. And in the current year, I have 50,000. So I have a 50,000 gain on the current year. So now I first need to offset 50,000 from the current year. Then the 40,000 I can carry back. But I cannot just carry back and leave the current year. It's not going to happen. So I will say it's false. If I like to carry back, I have to claim the current year first. The next one is say, if K Limited makes the maximum permissible claim, it will have 90,000 loss to carry forward at 31st of March 2022. So they're saying like if we make the maximum claim, then we'll still have lost 90,000. Doesn't look like true, because if we see 50,000 I can minus from here, from the current year. So from 100,000, if I minus the 50,000, I will have 50,000 loss left. This 50,000, if I minus from here, because I have 60,000 here, 50 plus 10. So if I minus 50,000 from here, I still have 10,000 profit. So my loss will be offsetted on 2022 and 2021. So loss will be completely gone. There will be no loss to carry forward, because this 100,000, 50,000 will be gone from the current year, and another 50,000 I can offset from the previous year. So there is no loss to carry forward. So the first one is false. The next one is also false. K Limited may claim to offset the loss against the total profit in year ending 2021 and then against the total profit 2022. We cannot do that. Remember that we cannot claim the current year, then we carry forward from the from the previous year. So if you read this question once again, K Limited may claim to offset the loss against the total profit in year ending 31st March 2021. This is previous year, and then 2022. So they are saying I can claim from the previous year first, and current year second. No, it's not going to happen. Current year always need to first, remember that. And the previous is the second. So first I need to claim from 2022, then I can claim from 2021. I cannot claim previous year first, then I come to the current year. No, that's not true. The last one we have here, K Limited may claim to offset the loss against the total profit in year ending 31st of March 2022. That's the current year. So I can offset the loss from the current year. This is true. And carry the remaining loss forward to 2023 next year. So they are saying I can claim the current year first, then I will carry forward. And the answer is yes, that's true. First claiming the current year, remember that after claiming the current year, where there's a loss, current year is 2022. So first I claim the current year. So current year. After the current year claim, either I can carry it forward or I can carry it back. There is no problem for that. First, I need to make the current year claim. After the current year, I can do carry it back and I can do carry it forward. Both are allowed. But first, I need to make a claim for the current year. And I can only claim 1 year back. And carry it forward is unlimited. I can do for unlimited period. All right. I think that's it. Then we have one more example. Let's quickly have a look at this one. It says comprehensive example. Janet PLC has the following actual and budgeted result. So always careful with this one, the year ending and the period ending. So year ending means it's 12 month, period ending, it could be more than 12 month, could be less than 12 month, but it is not 12 month. Then we have year ending, year ending. So we have a trading income for 1 year. This is not for 1 year, it is for a period. So then we have a year ending, year ending. Then non-trading role relationship income. So we have a 10, 10, 10, 10. And qualified charitable donation, we have 5, 5, 5, 5. Now this qualified charitable donation, remember that it can be wasted if we claim the loss. We have to claim it before the QCD. So sometimes the QCD can be lost because we're claiming the loss. All right, so from here, from September to March, so if we look at how many months here, so October, November, December, January, February, March, so we have 6 months here. So 6 months we have, and the 6 month we have a 30 plus 10, 40,000. So this one is for 6 months. You have to remember because it's a period ending. All right, so what is the requirement? Complete the table, assuming the company will make maximum permissionable claim. So they're asking to sort out the loss, show all the qualified charitable donation. Okay, even the company does not actually claim, so that's fine. Let's quickly do the workings for that. So 20, 30, 155 is the loss, 15 is the last year. Then 10 every year is the non-trading loan relationship, and QCD is 5. All right, let's do that. So you can see the question already gave it to us. So 10, 20 and 10, it is total 30. Here we have 40. Here we have 10. And we have 25. All right, the first thing we'll do current year relief. So current year relief. Current year relief means the loss on the same year. So on the loss on the same year, we have total loss 155,000 for this year. So 155,000 total loss. Make it minus figure. So the first loss we will do, we offset 10,000. So we say 10,000 I can minus because we have 10,000 total profit. So 10,000 will go down from here. So we'll still have a loss 145. And then we have the next one. What we can do, we can either carry it back or we can carry it forward. But they said claim the maximum permissionable. So we have to look at which one will give us more option to offset as much as loan, as much as loss we can set off against the income. All right, so we have here 145 is still left, the loss. The next one we have prior year loss. So it's a prior year or previous year. We have 40,000 here. So we can say 40,000. We can minus from here. So 40,000 will go from here, the loss. And then we still have some loss, 105. Then we need to look at what else we can do. So the next one we can do, we can offset the loss from the future year. So let's have a look how much loss we have. This is a limited company, so obviously we need to always look at how many years we can go back. If it is a limited company, remember that first we need to make a claim for the loss on current year. Then we will carry back. So carry it back 12 months. Then we have to carry forward. So we claim the current year. This is 10,000. So current year is done. And previous year I already claimed here 40,000, but it was for 6 months. If you remember, from October to March is 6 months. So still I need to take 6 months from here because I can claim previous 12 months. So 30,000 is for the whole year for the 12 month. So for the 6 month, it will be 15,000. So I can maximum take 15,000 from here. Very careful with that because this is period, it's not the year. This is the year, 12 month. This is the period, 6 months, that's the year. Year means I have 12 months. So in 12 months, I make 30,000 pound profit. So for the 6 month, it will be half, 15,000. I can take out 15,000 because on this year, I have only 6 months. So from the current year, I can always go back only 12 months. Remember that. All right, so if I do this one from the 40,000 and I have nothing here left. So I have 0, 0 and 30 minus 15. I have 15 left here. And here I have 25,000. Now this 25,000 I can carry it forward the loss. So carry it forward the loss. So 25,000 I can minus. So I claim the first current year, then previous 12 month, then carry it forward next year. And if I have any loss left, I can still carry it forward. So I have 40, then minus 15 and minus 25. So how much loss I still have left? Still I have 65,000. This loss will be still carried forward. And from 2023, 2024, from the next year, I will keep offsetting the 65,000. All right, then there's a QCD, qualified charitable donation, to show QCD every year is 5,000. So 5,000 minus 5,000 minus 5,000 minus 5,000. Now you can see this one, all 25,000 is gone. So I have nothing here. So this QCD is wasted because 25,000 was the profit and we covered by the loss. So we have nothing. So that my QCD or allowable expenditure for the charity is wasted. And this year I have a 0 as well. So this QCD also wasted because I'm not saving any money or tax because of the QCD. This year also wasted because I don't have anything. It's a 0. Only this year from 15,000 profit, I minus 5,000, so I have 10,000 left. So only my QCD I use for year ending 2019, but all the other QCD is wasted because the loss cover all the income. So I don't have anything from there. I can minus the QCD. All right, so this is not very difficult. And we have terminal loss, same thing the way we did for our terminal loss for the individual, like for the company is the same thing, but only you have to remember it is a LIFO basis. So last in, first out, and this will be before the QCD. All right, so I hope you understand this chapter. So we can have a look at the example for the terminal losses. And again, the QCD may be wasted because we use the losses. So there's example, the same we done before, we can always do that. So all the losses we have, you can see this is the losses we have. And these losses we can carry forward, carry back 3 years. So we can see minus, minus, and minus. And that will give us the remaining loss if we have any. But obviously, like we cannot go more than 36 months, it's LIFO basis. So how much is the loss we have? Need to make sure we do the current year relief. So current year relief will be offsetted. After that, first we take the recent year. So first we do number 1, number 2, and number 3. So if it is opening year, if you remember, opening year was with the FIFO basis, we start with the last accounting year. But with the closing year rules, that means when the business is closed, we use the most recent one. So this will be our first loss relief year, then second loss relief year, third loss relief year. All right, so I think that's it for this chapter. Hopefully, like if you revise a little bit and read all the things we have, make sure you don't leave anything. Read every single chapter we have. Most of the information is very important for your exam, and if you revise well, hopefully you'll be fine for your exam. So more you revise, you'll be more confident and remember more. This is very important. Tax paper will be a lot of rules, and you need to make a note. You need to make sure you do the same question a few times so that you remember the rules for long. As long as you solve the question, at the same time, if you can keep a note for your exam, so before the exam, you can revise and it will be very helpful for your exam. Thank you very much.